Hello and welcome to today's live level up conversation. Are you tuning in live with me? If so, what a treat to have you here and welcome to the show. If you're catching me on replay, it's great to have you here as well. Happy Thursday. Let's dive right into today's live level up discussion.
Welcome to Level Up with Winnie Sun. Market update. Speed round. Award-winning financial pro. And now, get ready. I present to you Level Up with Winnie Sun.
Hi, friends. I'm Winnie Sun, your host and award-winning financial pro, Forbes contributor, and CNBC council member. We are streaming here live on half a dozen different social media platforms. So jump right in, introduce yourself, let us know where you're joining us from. It is always a treat to be here with you. Let me tell you, I come here because I love to see this our amazing audience. And so it's always a treat. So I'm like coming back and just seeing how you're doing. It's been a really busy week in the financial front. So as we start off every show, you know how we kick it off. Let's talk about how the market closed. We were having such an incredible last couple of weeks. I was hoping it was going to continue, but unfortunately, it's a triple down day. The Dow closed down 237 points. I know, not good. And the Nasdaq closed down 77 points, and the S&P 500 also down over 29 points. Pretty disappointing. The Federal Reserve has raised its interest rates this week to the highest level since 2001. So they raised interest rates, not a complete surprise here, by 0.25%, by 0.25%. This is as of yesterday. Now, this brings the Fed rate currently to about 5.25% to 5.5%, which is the highest level it's been since March of 2021. Now, this marks the 11th rate increase hike since sort of the pandemic really sort of took hold here in the United States of March 2022, and comes after the Fed held rates pretty steady in June. Now, future rate hikes are expected, but whether or not they're going to take place really will depend on the impact of previous rate increases on the economy and whether these rate hikes have helped to mitigate inflation. Now, we have seen some positivity in that respect. These rate hikes seem to be taking hold because inflation has started to get to be more reasonable levels, not exactly where we need them to be, but improving. Now, Fed Chair Jerome Powell has stated that bringing down inflation to the target, the 2% range, will likely require a lot more time and below trend growth, but will require sort of, softening of the labor markets as well. So we'll see what that really means, right? When more people get laid off, are people just not going to go back to work, or what's going to change in terms of labor markets? I suspect some of that actually is going to be impacted by long COVID. I've been reading a lot more about long COVID and financial news and just the impact it's had on the U.S. economy and economies abroad as well, in terms of labor and people getting back to work and just not feeling comfortable or even healthy enough to be back at work. It's pretty shocking, those numbers. Now, the Fed continues to view inflation as elevated, and it does remain very much focused on bringing inflation down, despite though that having a sort of a better, lower inflation numbers last month. So we'll see how that goes, but I just want to tell you that's how we're seeing inflation currently right now. And that's why the interest rate took place. And that's also why it broke our stock market streak here for many days. Now, all of a sudden, we're in negative territory again after many days of positive territory. In fact, breaking a new record on positivity in stock markets on the Dow, but that sort of changed. Now, talking about changes, let's talk about the change coming to many banks, and it could even be your bank. Now, there's going to be new capital rules for banks. So U.S. regulators have said, we don't like what happened just recently. You remember Silicon Valley Bank and some of the other banks having financial issues. Well, U.S. regulators have now just announced and revealed a new, very comprehensive set of proposed changes to your bank's capital requirements. Okay, so this is to address the evolving international standards that many other countries have and recent regional bank crises. The changes are designed to enhance the accuracy and consistency of regulation, and they're going to impact banks with at least $100 billion in assets here in the United States, with the largest and most complex banks expected to be affected actually the most. So those of you who maybe bank at some of the larger banks like I do, no longer is it too big to fail. We got to make sure they have the assets and security so that we can feel comfortable keeping our money there. Now, these proposed rules will revise regulations related to those risky activities that banks use, such as lending, trading, value of derivatives, and operational risk as well. Now, these changes will broadly increase the level of capital that our banks need to maintain against potential losses, depending on each bank's individual risk profile. So I think this is a good thing. I like this. Regulators estimate that the proposal will result in an aggregate of a 16% increase in common equity tier 1 capital requirements on many, many banks. What that basically means is that banks need to have more safe capital on their books so that when they lend to us, that they're going to be okay. And if we need to go to the bank and get our money, that it will be available as well, and it's not going to just completely collapse the bank. Now, this is in response, of course, to the failure of Silicon Valley Bank just in March. The proposal is going to force a lot of banks to now include unrealized losses and gains from certain securities in their capital ratios, and just there's going to be a lot more regulation. Nothing new if you're in the financial industry, as I am. This is just another compliance thing that you need to be aware of. Yes, some people could say they're headaches, especially for those of you who are in the financial industry, but certainly I think we can all agree that this is for the best. We want to make sure that you feel absolutely comfortable with where your money is and knowing that it will be there when you need it, right? Joshua? I'm thinking you agree. I see Cross-Egg Spider joining us on YouTube. I see a lot of friends today on all different platforms, LinkedIn as well. Thank you so much for being here. All right. I want to share another story with you that caught my eye and I thought was interesting and this is about the adoption of AI and automation here in the US workforce. I thought this was something that you definitely should be paying attention to because a new report has been shared by McKinsey Global Institute that suggests that this now accelerated use of AI in big business as well, maybe even your daily life, could result in the automation of about 30% of work hours here in the United States by 2030. Now, before you get too excited about that, 30% of your work hours could be taken care of by AI. But then you got to wonder, does that mean, number one, that your workday will be reduced by 30%? Will it mean that your paycheck will be reduced by 30%? I don't know. But without generative AI, automation could account for about 21.5% of work hours. But with it, the share now has jumped with almost 29.5, almost 30%. So some of the professions such as science, technology, obviously engineering, STEM industries, mathematics, could see their automated work hours increase by 16 points to 30% due to AI adoption. Now, education and workforce training professionals, you might experience a 16% increase, and accounting for about 23% of their work hours by 23 with AI guided automation. So it'll be interesting to see like how your industry is impacted. So do me a favor, if you're watching, jump in, go ahead and put in comments, what industry are you in? So if you're in like, let's say you're a production worker, right? Or you do agricultural work, you might see a smaller impact, of course, with AI, with only maybe 3 to 4% increase. So it really depends on which industries, but some of the areas that are really going to be affected are obviously creatives and art management, business, legal professions, definitely very much affected by AI. Across all sectors, American workers could see an additional 8% of their work hours now automated. So the question is, how will that affect your paycheck, your schedule, and everything in between? So this is something I think we as Americans and as humans in general should be paying attention to is how do we continue to quantify our value, and hopefully, if more things can be powered by AI, that because it's sort of across the board, that it will give us more quality of life, but without impacting too much, hopefully, of our income and what we bring in on that paycheck. So we'll see how that is, but definitely a story to keep a close eye on. All right, this is something else that caught my eye, and I want to put this on the focus for you as well. I caught this; it was on Twitter, but also it was trending in financial news as well. Well, you know about Twitter and their new rebranding, their recent rebrand to X, right? This actually happened this week. X is now management under Elon Musk, as many of you know. But do you remember that story not that long ago about that executive that worked at Twitter when it was still Twitter, and she like spent the night in a sleeping bag at Twitter, and then she became like she was saying she was all in, she was really dedicated to the company, only to find that she gets laid off by Elon Musk. Well, Esther Crawford, former head of Twitter Blue, shared some really interesting insight on X, formerly known as Twitter, today. And I think it's today, or maybe it was yesterday, but it's just recently, on her experience of working with Elon Musk. And I thought it was really fascinating. She describes the old management at Twitter as bureaucratic and very much requiring a lot of political prowess to be able to get things done. And she talked about the negative and the positive of pre Elon and post Elon. But one quote that she shared that I really want to share with all of you, because I thought it was really cool, and I actually shared it on my Twitter profile today, is she said, living in an echo chamber is dangerous, and being at the top makes a person even more susceptible to being surrounded by yes people. When nearly everyone around you is on the payroll and somehow stands to benefit from being in your orbit, figuring out how to keep better angels, I love that term, better angels around in the form of family, friends, teammates, those who watch you on live stream, is critical to staying on the rails and enduring intense ups and downs. And everyone needs to hear hard truths sometimes. And if you fire all the people who speak up, then the reality distortion field may just turn into a vortex. I was like, that was such a great quote. It's so true. And in fact, if you follow the story of previous Zappos, previous CEO, Tony Hsieh, you know just how true this is. So after Elon took over Twitter, Esther felt that she was still cautiously optimistic, but acknowledged that there was definitely a lack of psychological safety at Twitter 2.0. And she talked about how people at Twitter feared of being fired, feared of giving any negative or feedback to Elon, that anything was anything but perfect, and just saying that Elon Musk's personality and demeanor could quickly go almost like bipolar, go from being really, really excited and happy to really, really angry. And so employees were actually worried and scared of approaching him for many sort of reasons. So this video has definitely gone viral, but I thought I would share with you because it kind of gives you some insight of what Twitter or X is probably like for employees now. So if you're watching and you're a Twitter employee, we thank you for your service and thank you for keeping the platform going, and hopefully better days ahead. Hopefully better days ahead. Hopefully X turns out to be better than we all expected, right? Then we'll take it. Speaking of better than expected, this is my last story. I want to share this with you because we had to leave today's show and a positive, and I thought this was a fun one. McDonald's. I don't know if you've been to McDonald's lately, but let me just tell you, McDonald's has been having a great time this quarter. They've experienced viral success because of the one and only Grimace. Grimace, you may have known Grimace. Well, Grimace just celebrated a birthday, and McDonald's introduced a limited edition milkshake, a purple milkshake, which unexpectedly went viral on TikTok, leading to increase in sales in the second quarter. In fact, TikTokers created these mini horror films with these purple shakes, saying like, would you get sick drinking them? Would you die drinking them? Well, it was so fun, and feels so much interest that I guess people went to McDonald's and bought a lot of these purple shakes. Some people bought them just to make videos with them. Some people just really enjoyed them. This is dessert drink. Anyhow, this resulted in a spike in sales. In fact, the CEO of McDonald's attributed the success to the power of marketing at McDonald's, and mentioning that the brand's marketing efforts have really also improved food quality scores across the board for people that were sort of surveyed on this. In fact, in the US, sales at McDonald's locations open for the at least 13 months increase by over 10% in the second quarter alone, thanks to these purple milkshakes, I guess. Over 11% driven by growth in China as well. So the Grimace birthday campaign became one of McDonald's most socially engaging campaigns ever. I know, it just shows you that even old brands like McDonald's need to reinvent themselves and get out there, embrace social. Hopefully, you get TikTok, and there you go. So, congratulations to those of you who are with McDonald's or eat at McDonald's. I haven't been there a real long time, but let me know if you have. And Joshua Crossix Spider says, I love eating at McDonald's. Did you try the purple shake though? Joshua, did you try the Grimace purple shake? I do want to know that if you have or not. So definitely let us know. And thank you so much, everyone, for tuning in and watching, and our esteemed audience for being here with us. We're going to have another set of great shows for you next week. And I'm going to check in with Greg and see if we're going to do In the Loop tomorrow as well. Hopefully we will. If you enjoyed this video, give us a like and subscribe. And of course, if you share it on social media, make sure to tag at Winnie Sun so I can properly thank you as well. It's so great to be here with you. And don't forget to catch full episodes of Level Up Live with Winnie Sun on NASDAQ, Amazon Fire, Samsung, LG, Roku, and a lot of other streaming platforms. And you can check out the Yes Factor with Winnie Sun on Apple Podcasts and the LinkedIn Podcast Network as well. With that, I'll see you very soon. Take care, stay cool, and be well. Bye-bye now.